Good afternoon. Now in this class I am going to take some of the accounting standards and I want to explain that in brief. First one is accounting for construction contracts. Okay. In this context, construction contracts for construction of buildings, bridges, roads, etc. We have to go for this contract accounts. There, the contract accounts, they are to be dealt in a different way, and they will come either in financial accounting or in cost accounting. In financial accounting, when we come across in what way we have to take into account all these things, you will come to know from this accounting standards. That is, they will differentiate between this financial accounting and cost accounting. In cost accounting, you will come across contract accounts, and again you will come across contract accounts in financial accounting. When this contract accounts, when you are coming across how to deal with this contract accounts, what are the accounts that we have to prepare. When we go for contract accounts, first thing is we have to prepare contract account, taking into account the expenditure as well as the income that was received by a contractor. Then contractee account. All these things, they must be transferred, they must be prepared, and the result must be transferred to profit and loss account. And this profit and loss account, we will call that as notional profit, and again we have to distribute that between work in progress and profit and loss account. This is how you have to prepare this contract accounts, and the variation you will come across when it is dealt in financial accounting, in the same way when it is dealt in cost accounting. Next one is accounting for research and development. Accounting for research and development. It is not mere continuation of this processes, accounting process and accounting policies. We have to do some research and development. Okay, that research and development, it makes the accountants to go for an easiest method, easiest way in representing the financial statements without any default or without any fault. So research must be done by the people, and after doing the research, it must be developed, and this development, it will help not only the industry, not only the organization, but you can be in a position to tell what the new things that we come across after making the research and development, what things that we discovered and we came across, you can be in a position to tell to all the people. And in this context, I am going to tell you a small example. See, people nowadays, at present, people, they are suffering from this coronavirus, and so many researchers they are doing, and they want to develop a vaccine or medicine for this control of this coronavirus. And different people, after making the research and after finding out the results, they are just communicating and they are telling that to all the people, they can be in a position to help others in controlling and curtailing this coronavirus. And next one is accounting standard 9, revenue recognition. What is revenue recognition? How much revenue? It is nothing but income. What we are getting is nothing but income. And the same word revenue, it represents in a different manner when we go for financial statements or final accounts. Revenue means nothing but income, that what we are receiving, and how we can recognize from where we will get this income, from where we are going to take the income from the people. Okay, that recognition, that must be there. Without having revenue, no one can do anything, no one can go further. So compulsory, we have to get some revenue, then only we can think about the expenditure or we can go for expenses. So this is about the recognition of revenue according to AS 9. AS 10, accounting for fixed assets. That is very, very important. accounting for fixed assets, accounting standard 10. See, when you take a business or a commercial undertaking or a company, you will come across so many assets. And when we go for assets, we will come across so many types of assets like fixed assets, current assets, miscellaneous assets, all these things, tangible assets, intangible assets, all these things we have to take into account, and we have to see what are the fixed assets, what are the current assets, what are the tangible assets, what are the intangible assets, what are the miscellaneous assets, all these things we have to identify. And after identifying, we have to take into account the fixed assets. Okay, when we purchase the fixed asset, and how many years we are using that fixed asset, and what is the amount of depreciation that we have to charge, and what will be the cost of the asset, whether the cost of the asset becomes zero or still some amount is there, all these things we will come across, and in what way we have to show the fixed assets in the financial statements. Previously, business people, they used to take the fixed assets, okay, as they are, but now all the people, they are going for the block system. Block system is nothing but one asset, they are entrusted to one block. Okay, according to the block system, they are going, and whatever it may be the purchases of the assets, they are taking that and they are adding that, and from that they are charging the depreciation according to the purchase date of the new asset. Suppose if there is a fixed asset which was already purchased long back, then we have to charge depreciation for 1 year. And when we are purchasing in the middle, we have to take into account the date of the purchase, and according to the date of purchase, we have to charge depreciation. So this is very, very important, whether we are going for block system or not. People, they look after, and when we go for block system, automatically we can able to understand this fixed assets, what is the depreciation that we are charging, and what is the cost of the asset that was left over after deducting depreciation. This is nothing but accounting of fixed assets. And after that, we are going for the accounting standard 11, accounting for effects of changes in foreign exchange rates. See, when we are producing some commodities, we will use the commodity, that is, we will consume the commodities, and whatever it may be the excess amounts of commodities over the consumption, we have to send them to other people. That is nothing but foreign trade. That is, export and import will come in this. When we are going for export and import trade, that is international trade, okay, we have to look after the exchange rates. What is the currency that we come across, whether we are coming across any changes. When we are coming across any changes, what are the effects that we are getting by the changes in the currency rates. For example, if you take into account the American dollar, so what is the currency that we come across when we take a dollar in our Indian currency? And this currency, it will fluctuate from one day to another day. So according to the dates, we have to take into account what are the amounts, what are the rates that were existed, and according to that rates only we have to take into account the payment aspect. That is, when we are taking the goods from America, we have to pay them, and what is the currency rate on that date, according to the rate only we have to go for payment. And changes, whatever it may be the changes that we come across, okay, they are not stable, mind it, they are not stable, they fluctuate from day to day. When they are fluctuating, automatically they will have their impact and effects on the Indian currency as well as the business units. So this is about the AS 11 accounting standard. Now coming to 12, AS 12, accounting for government grants. Okay, accounting for government grants. Small companies, they look after the assistance, okay, for them to prove themselves as a good units. For that, they will seek the help of the government people, whether they may be local government or state government or national government. And the government people, okay, in order to improve the small industries, they will give some grants to the industries. And how much grant was given by the government, and in what way we have to repay the amounts to the government back. Okay, all these things we have to take into account, and they must be given, okay, they must be given prior importance. For example, if you take into account Indira Vikas Yojana, okay, they'll give some amount and they will ask you to repay that amount within 30 years. So in what way we can pay? Because when we are taking the grants from the government, given by the government, either it may be local or state or national government, we have to repay the amounts, because those people, those government people, in order to help us and assist us, they are giving some grants. Okay, all these things we have to take into account, and we'll read that in Accounting Standard 12. Now, Accounting Standard 13, Accounting for Investments. This is very common. This is very common for companies. Not only companies, small businesses, they will also go for the investments. They'll see, we have invested in this much amount in the business. And when we are doing the business in a good way, whether any person will come forward and invest their money in our business. So like this, investments also, they will play an important role in this, okay, business circles. And one more thing is, the small businesses, for example, sole trade business, they will save the money, okay, whatever money they will get, they will save the money, and all the money, whatever they saved, they will invest in the business. So from there, the investment structure will come across. Okay, after doing some business, okay, they will look after whether there will be any investments in our business or not. Anyone is willing to come forward and give the money or invest the money in our business. Thereby, we can develop and we can improve the business to heaps and bounds. So, these investments will play an important. When we are going for investments, one more thing you have to keep in mind is how much interest we have to pay on these investments. Okay, whether we have to pay according to our wish, or whether we have to pay according to the terms and conditions that we come across between the investor and us. Because investors, they will always concentrate to get more money on the investments, whatever they are investing. So they will charge, I am going to charge this much amount, like that they will say before investment. So if it is good and if it is genuine for you, if you can go for that, or else you have to tell them that we cannot able to pay that much amount and we can able to pay this much amount. If it is okay, satisfied, then we are going to take your investments. Like that, investments will play an important role in this accounting systems, accounting procedures. And after that, we are going for the 14th one, AS 14, accounting for amalgamations. This is very, very important topic that we will come across for degree students, PG students, and CA students also. Because amalgamation, okay, the word itself, it tells us that amalgamation, that is, when two are I'm giving an explanation for this. When two or more companies doing the same type of business, and when they are competing with each other, no business will get a huge profit amount. Moreover, there will be a cutthroat competition between the two companies. In order to eliminate the cutthroat competition, in order to occupy the whole market, some companies, they'll come forward to amalgamate with each other, forming a new company. That is, two companies, two or more companies, when they come together, when they club together, forming a new company, we will call that thing as amalgamation. Okay. And the names for this is amalgamated company, that is the two or more companies who are ready to join together. We'll call them as amalgamated companies, and the new one as amalgamating company. So amalgamation is compulsory when we come across any cutthroat competition between us. Okay, this is the thing that I want to tell you in this class, and whatever it may be the comments that you want to give, and whatever it may be the doubts that you have, please give them in the comments box. And I am closing this class at this stage, and remaining accounting standards will read after some time, that is in the next coming classes. Thank you.